Folks, this is your host Mandeep. It is Sunday, August the 9th, and in today's video, I'm going to share with you my recipe for day trading. Now, I've shared this information in various formats in the past, and what I'll endeavor to do today is bring everything together and share what are the four parameters or five parameters that I like the best and watch on day-to-day basis in order to put the probability in my favor. Now, this is something I've said before a number of times that everybody's mileage is going to vary, right? Everybody's different when it comes to trading. It's just based on how much capital you have. It also is how much emotions you put into the trade. It also depends upon your time frame. So my recommendation always is that if something is actually working for you, then stick to it. Now, trading is all about a methodology that you actually end up developing, which works for you, and you have to stick to that. Of course, you make some minor improvements into your strategy as you go along, but you don't want to be changing your strategy drastically, right? So, for example, if 15-minute is what you choose to trade on, you certainly can't switch to 5 or a 3-minute chart. So, in essence, what you want to do is be able to use the same technique and rinse and repeat every day. So your goal should be to spend less and less time after hours looking at the market and just take what the market gives you in the regular trading hours. At least that's what I look at. So there was a time in the past that I used to spend an inordinate amount of time looking at charts and looking at technical indicators on weekends and at night. But I've started to do that less and less, and that's obviously given me extra time to spend with the family. But of course, because it's taken me a certain number of years to be able to build something that works for me. So without further ado, let's take a look into that. So the very first thing that I look at is a list called TC long small. You can call it whatever it is, and this is something that I provide when people buy the ultimate trading strategy from me. So the goal of this dynamic list is to give you the best opportunities for day trading, right? Because it's looking for stocks that are doing well on a monthly chart. It's looking for stocks that are doing well on a weekly chart and also on the daily time frame. Now, granted, this is going to change on day-to-day basis, and it'll try and give you the best opportunities, at least from what I think is the best criteria, both on the long and the short side. So while this list could be significantly large if it's a trending day, or on days when the market is very neutral, it may give you zero opportunities. But on most days, it'll give you enough trades to choose from. Now, so this is on Friday. These are the number of there were quite a few trades. Now, it's almost impossible to be in each and every trade. So I have to have a mechanism to further filter it down. And what I've done is I've chosen like 1, 2, 3, 4 things. And in addition, of course, I pay attention to the actual signal that's given by the strategy that I've written, right? So that's obviously the key thing. Now, in order to filter down, the first thing I look at is what is called a dynamic orb. Now, I would like to tell you upfront that a couple of these indicators are not free because I've written them myself, and these are not available as standard indicators on TOS, and have taken a significant effort on my part to be able to put these together. And I haven't seen very many people, or hardly anybody, that has actually written these indicators. This dynamic, the orb, of course, is fairly standard. So if you Google it, you'll find a number of people that have written the orb code, and the orb, or the opening range breakout. Opening range breakout can be either a 15-minute, it could be 30-minute, it could be an hour. So it really depends on what time frame you choose. What I have done with dynamic orb is it's dynamically adjusting. So what it does is it'll first look at the orb for the first 15 minutes. So it'll once the first 15 minutes end and you have the next bar trading above the 15-minute, it'll start populating this with the 1 0 negative 1. 1 means it's trading above the orb. 0 means it's trading inside the orb and -1 means below the orb. And then this will self-adjust at the end of the 30 minutes, and then it'll start giving you the opening range breakout for the first 30 minutes. As you can see, this thing, this line right here is the first 15 minute, and then the hour and the 30 were the same. The next thing I look at is the relative volume. And so relative volume is something that TOS does not give you any standard indicator to compute. So think of it this way: a stock, if it trades like 1 million shares a day, and at some point in the day it's trading 2 million shares, then it's trading at a relative volume of 2x. So now the issue with that is that by the time it trades 2 million, half a day or 3/4 of the day is gone, and you really can't take advantage of the movement in that stock. So in order to explain this thing a little bit better, I'll show you a graph, right? And in this, as you can see, this is 15 minutes, and there's 26 bars in a day if you're trading the 15-minute time frame. So what I've done is I've broken this up into chunks of 6:30 to 6:45, since I trade in the Pacific Standard Time. And so each bar is giving you what the volume should be at that point in time. So let's assume that you have a particular stock that trades 100,000 shares, right? So that's 100% of the total volume, and that's your average volume, which you can look at on any period. Let's say this is the 30-period average volume. So in the first 15 minutes, that stock should be trading approximately 3.3%, and then in the next 15-minute chunk at 7, it should be trading 7.7%, so on and so forth, right? So that's how you would break down the volume into linear chunks. Now, what you are interested in seeing is that if the volume is 3.3%, what if it is trading much higher, right? What if it's trading at 15% already? Or in this case, the next bar it's higher. So by the time you're, looking at, half a day that's passed, instead of 50%, it's trading, more closer to 80%, right? So when you see that kind of information and you see that early on during the day, the volume is going to go beyond what the average volume is. So if it typically trades 100,000, it might trade 200,000 or 150,000, right? So just by knowing that early on in the day, it gives you a little bit of an edge, because that's telling you there's a certain amount of institutional interest in this that's driving the volume. It could also be retail interest, so or a combination of that, which is driving the volume high, right? So in addition to that, we're also looking at what is called the ATR expansion. So the average true range is nothing more but the difference between the high and the low, computed over a certain period of time, and the standard duration they use is 14. However, I end up using the 20-period ATR because that jives with the number of trading days in a month. So if you look at Amazon as an example, the average true range for Amazon is $100. In other words, it's between the high and the low, it moves 100 points in a day. Now, typically, it will end up moving about one standard deviation, which would be about 68% of its expected move. Right, so if it's 100 points, you can normally expect it to move 68 points, but there'll be days that the ATR is going to go way beyond 100, right? Might go 150 or whatever, because it's averaging out to 100 points, right, between the high and the low. So the same concept you can also use you can replace the relative volume with ATR sizzle as an example, and the same principle applies, right? So if Amazon trades 100 points during the day, and if you linearly break it up, right, so it would trade about 3.3 in the first 15 minutes and 7.7 in the by 7 o'clock. But instead of trading 3.5 points, it's trading like 6 or 7 or double that amount. You also know it has a range expansion that's occurring in this, right? So when a range expansion starts to happen early on in the day, the chances are that the ATR, which typically in case of Amazon trades 100, could go way beyond that. Again, remember 100 is the average, so there will be days when it'll trade way beyond that. So if we can identify those days where you have volume that is expanding, or the relative volume is high, and there's also range expansion that's happening in the stock, that gives you a real big edge when it is trading. And I know that from back testing and looking at it from a statistical standpoint, and we can take a look at a few examples. So that's 1, 2, 3, and the last thing is whether it's taken out the high of the previous day or not. So just remember that the high of the previous day is always a point of resistance, or the low of the previous day is also another point of resistance if you are looking for an entry on the short side. The reason is that those people that got stuck at that high point, or bought at the high point, and after that the stock dropped, have been in negative for the entire day. And if these are short-term traders, and next day if they get an opportunity for them to even up their money, they're going to take those trades off, right? So therefore, if you combine these four sort of parameters, and I, of course, to me, the most important thing is actually getting a signal as well, which is based on the ultimate trading strategy. Then I have what I call as a perfect trade as far as I'm concerned. And no matter how many I get, I'm going to take all of those trades. Again, there's no guarantee these will work. What it is doing is it's definitely putting the probability in my favor. It's also giving me an extra edge, right? So let's take a look at what happened on Friday. So the first thing was that you had UPS and FedEx, right? So once you see more than one stock from the same sector, you should definitely pay attention to it, right? So that's telling you, for whatever reason, there is a certain amount of interest in a particular set of stocks, right? So once you know UPS and FedEx are doing well, so that was coupled with the fact that there was an order break. The volume, right now it's obviously showing the volume which is at the end of the day. In other words, the relative volume is 200%, so 2x, right? But even early on in the day, the volume was trading much higher, right? So because the volume is trading much higher and the ATR was also expanding, in addition, we had the previous day high taken off. This gave, at least for me, the best recipe for a trade, right? In addition to that, there was a buy signal, and so obviously this, I'm looking at OSTK in this example. So let me switch to UPS. So in case of UPS, the orb was broken, you got a buy signal, and a trade came. Now if you right click on this and click on show report, it shows you this trade made $463, assuming you took 100 trades, 100 shares in this, right? So the next example is FedEx, right? So the same thing happened in FedEx, exactly the same criteria that I looked at. So the advantage to me is that a number of these other stocks got just eliminated by default because they were trading below average volume, or they had no range expansion in terms of the ATR. So that doesn't mean that some of these did not get a buy signal, right? So I mean, this also had a buy signal and did all right, but to me those aren't the highest probability trades, and I just like sticking to a methodology when it comes to day trading. Now let's take a look at OSTK again, and one of the reasons I'm highlighting this is that when you look at this kind of a criteria where the relative volume is high and the ATR is high, it historically has done very well, right? So in this case, you have 11 trades, out of which 9 were wins and 2 were losses. So when you see that kind of high win-loss ratio, right, then of course you feel more confident to be able to take a slightly bigger size. Now the other thing I want to point out is that the win-loss ratio by itself, this number is not the most important number, right? What is more important is how much do you win on an average and how much do you lose on an average. So I'm going to show you the example of Apple here, in which case the actual win-loss ratio is below 1, right? So you only won 41.6 0.6% of the time. You won 5 trades and lost 7, right? But what is more important is how much do you win in these 5 trades and how much do you end up losing on an average on these 7 trades. So as you can see from here, your average win is 539 and your average loss is $95. So you win 5 times more in your winning trade. So even though your win-loss ratio is less than 1, your actual profit at the end of the 30-day period is 2028 using 100 shares of Apple. So we'll take a look at a few other examples, and this thing really works well on Amazon. I've talked about this a number of different times in the Discord room as well, that take Amazon trade every time it comes. But in this case, you're looking at these 4 things to come together. So in case of Amazon, you're looking at a high relative volume. You're looking at a high ATR range for that day, and in addition, you're looking at Amazon taking out the previous day high, and you're also looking at a buy signal. So in this case, there were 9 trades and all of them were winners, and I'm happy to show you what they look like, right? So this is trade number 1 that happened, right? This is trade number 2 that happened, right? All of these days had the same characteristics. You had high relative volume, high ATR, previous day was taken out, and obviously or break. This is another trade. This is yet another trade. And even though in some trades it was like small wins, but nevertheless, at the end of the month, they all added up. And this, with 100 shares, produced $37,000 in profit. So the reason I'm sharing this with you is that there's obviously no trade. There was no trade last 2 days of this, because none of that criteria was met. So in other words, you could just trade Amazon and trade like 4 to 5 times or 9 times in a month, right? And still be very, very profitable. Now, clearly, you don't get 9-0 count on every trade, but that's anyway the methodology that I tend to follow, and I tend to trade. And I share this, of course, some of the opportunities in the Discord room with the fellow UTS traders who are using the same methodology to trade. And so for me, I've honed down that these 4 things end up being the most important things. Just by looking at it, I eliminated a ton of trades, right? So even though some other ones are profitable, but I was able to just focus on far fewer trades, right? And be able to just focus on that during the trading day. So I hope this video helps out a little, and I don't think this is limited to just the Thinkorswim platform. You can use the same methodology on other platforms. The only thing you have to do is figure out and see on which stocks does it perform the best. So one of the things that I do is when people buy the software, I anyway provide these stats up front, right? So everybody has these stats available to them, and they can run it on the weekend on their favorite stocks, right? And see which ones are performing the best, right? So I've looked at a couple other stocks on which this kind of methodology works really well. And if I find some stocks where it doesn't work well or is negative, then I have no inclination to take those kind of stocks. But like if you get a setup like this, where out of 7 trades you're 6 winners and 1 loss, that's a really good kind of setup that you want to take. So have a wonderful trading week, and I'll see you guys in my next video. Bye-bye.